Good afternoon. You're watching Businessworld Live. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Friday. All right, the rally the past 3 days in the local index not carrying over to today, trading below 6,500 yet again. You have the main index ending the week on a low note, down close to 0.7% to 6,494.81. Week today, the benchmark, as you can see right here, edged lower by 0.8% with 3 of 5 trading days in the red here for the PSEi. Majority of stocks today capped off the week on the downtrend, with only 8 of the 30-member index ending the day in the green here. As you can see, Metro Pacific here leading the charge here, up over 2.5% now at 4 pesos and 5 centavos a piece. ICTSI likewise is our second placer here in the green by 1.1%. That, of course, you have here Manila Water saying that it sees more overseas opportunities after Enrique Razon's entry in the utility operator, given his experience abroad as well as experience with regulated businesses. Again, ICTSI is in the green here, now valued at 536 pesos and 50 centavos a share. Now, let's take a look at two retailers as well here. But before that as well, let's have a check. On the other hand, you have a number of stocks here in the negative. JG Summit here ending the day in the red, down 3.7%. Our worst performer today here, it's down by 58 pesos and 40 centavos. In fact, you have a number of Gokongwei stocks here ending the day in the negative territory. The likes of Robinson's Land and even RRHI, as you can see, is also edging lower by 1.6%, as well as URC that has dropped close to 0.8%. But from there, let's move on to a number of retailers here, to be exact. Convenience stores, Merrymart and 7-Eleven. Let's kick things off with Merrymart. The grocer rallied today after the company said that it is setting up a unit for consumer tech-related ventures. It will be called Consumer Technologies Corporation. It is expected to help the grocer tap sunrise sectors and expand their reach in the market. That development allowed Merrymart to at least climb to its highest this month, up by 0.8% to 5 pesos and 58 centavos a piece. On the other hand, not so good news here for Philippine 7, the operator of 7-Eleven here in the Philippines. They incurred a net loss of 419.7 million pesos in 2020 due to lockdown restrictions. Full year same store sales also dropped by 18.4%. Operating income, however, coming in also lower here to 445.7 million pesos. Some semblance of growth, though, in the last quarter. Net income of 165.6 million pesos. That's a reversal from the losses that they had in the second and third quarters of 2020. But despite the losses in 2020, you have the operator of 7-Eleven here in the country still up close to 0.9%, now at 103 pesos a piece. Yesterday, also, you have a stellar output from the mining sector, which in a way lifted local shares, heading towards that gain at the end of Thursday's trade here. Let's have a quick check, of course, at how our miners are doing again after the lifting of a ban here on new mining agreements. As you can see here, the counter is up 1.9%. Lepanto, both Class A and B, are still making quite hefty gains here. Class A up close to 9.6%. Class B, however, is up still 6.8%. The likes of Nickel Asia, Semirara, and PXP still also making gains at the end of Friday's trade. Now, to give us more details on when the Mines and Geosciences Bureau targets to finish the implementing rules and regulations for the granting of new permits, we have our correspondent, Shaila Francisco, joining us live. Shaila, what's the target date of the MGB for the IRR, and how many projects are seen to benefit from the lifting of the ban?
Just Mines and Geosciences Bureau is targeting to finish or finalize the implementing rules and regulations within a month. They've already met with their technical division and are set to coordinate a meeting with the finance department next week. Now, they are fast tracking the IRR so that the country could already benefit from the sector, although they acknowledge that there is not a significant effect on the GDP or economy this year, some benefits can already be felt. Around 101 mining projects are seen to benefit from the moratorium. These include 36 mining projects which are in phase one or the final stages of the processing permits. Most are non-metallic mines that are seen to contribute to the government's Build to Build program. Another 65 projects are in the phase two or in the earlier middle stages of the development or processing permits, and these are mostly metallic mines. Now, overall, these projects are expected to generate 42,000 jobs within 1 to 5 years and also generate 20 billion in revenues, which is seen to also benefit the indigenous peoples. Jess?
Okay, so given that this lift on the moratorium has been met, of course, with opposition from certain groups, what are they saying now?
Just on one hand, we are seeing environmental groups saying that these projects could harm the environment, the food supply, the forest, and such. We have another group, Bantay Kita, who's saying that a fiscal regime should be amended or fixed. They see that estimates given by the MGB on the jobs and revenues generated could be much larger if they just amend or fix the fiscal regime. One of the recommendations is to oblige all mining companies to pay royalty fees and not just in the mineral reservation areas. Now, President Duterte has already tasked the DNR to look for mineral reservation areas, and the MGB also assured the public that environmental and safety measures will be in place in the crafting of the IRR. Jess?
All right, thank you very much for those updates. Again, that was Shaila Francisco. Here are other headlines we're keeping our eyes on. Agriculture Secretary William Dar insists that additional pork imports will stabilize prices of the commodity as the country continues to battle the ASF outbreak. In an interview on The Chiefs, Dar said he respects the Senate's decision to call for the withdrawal of the president's executive order, which increases the volume of pork imports and lowering tariffs of the product. But Dar explained that the proposed low tariffs on pork imports will only last for a year until such time that local supply recovers. The agriculture chief is also confident that the move will not kill the local pork industry, as critics say.
The EU is only good for 1 year. So this is a stopgap measure. And all others, kagaya ng MAB Plus, kasama yan, stopgap measure. Para lang, the whole intent is really pababain po natin yung presyo ng baboy dyan sa merkado kasi masyado na mataas to tame inflation. So, alam natin na while we are pursuing our first priority of repopulation or enhancing recovery, yung gap ay pupunuan yung augmentation galing ibang bansa. Para sa ganon, mayroon pa rin karne ng baboy.
Meat importers are echoing Dar's sentiment. The Meat Importers and Traders Association believes that consumers will be at the losing end if the order on pork imports will not push through. The group's president, Jesus Cham, tells 1PHS sa Totoo Lang that they are offering to sell imported live hogs to the Agriculture Department for as low as 150 pesos per kilo.
Ang offer ng local ngayon sa Maynila, ang buhay na baboy is 250 pesos buhay. Ang offer namin sa DA is, sige, kapag mayroong mga tindera, mga wholesaler gusto kumuha sa amin, ang presyo niyan, katumbas niyan, equivalent to 150 pesos per kilo na live. So, you can imagine yung differential ng 100 pesos difference sa live. Ano? Sa 200 pesos per kilo na yung carcass, kaya po ng tindera na i-retail at 300 pesos niya.
And this from the Philippine Star. Citigroup is ending its consumer banking business in the Philippines and 12 other countries to focus on better growth opportunities. Apart from the Philippines, Citigroup will also exit China, India, and 10 other retail markets where they say they don't have the scale needed to compete. Most of the markets being exited are in Asia, where Citigroup's global consumer banking business bagged $6.5 billion in revenues and $123 billion in deposits last year. Citi Chief Executive Jane Fraser described the pivot as part of an effort to double down on the firm's wealth management. Citigroup joins other large banks in reporting blowout earnings amid a strengthening U.S. economy. Citigroup will now focus its global consumer banking business on 4 markets: Singapore, Hong Kong, Britain, and the United Arab Emirates. Coinbase, the largest crypto trading venue in the United States, has debuted on the NASDAQ. Bloomberg's Eddie van der Walt explains why this IPO is considered as one of the biggest developments in the crypto space.
IPOs show crypto is growing up. Bitcoin and other cryptocurrencies have long existed on the edges of global finance, occupying a strange parallel universe. For many in markets, they probably resembled the Wild West. Now, with IPOs and traditional trading venues opening up, it seems that the industry is becoming a little more refined. Coinbase, the biggest US crypto trading venue, has launched its IPO, which is perhaps the biggest development in the space since Satoshi Nakamoto wrote his white paper. The listing democratizes a key part of the infrastructure and gives more risk-averse and fundamental investors a way to value and profit from new technology. Think of this IPO as selling shovels in a gold rush. Investing in an exchange doesn't require the belief that crypto will replace the dollar. As long as there are those who are willing to buy and trade crypto, volume at this new class of exchange should do well. Beyond Coinbase's pure size, though, what makes it significant for investors is that it offers a way of applying the methods of traditional finance to crypto. Discount cash flow models don't work on quasi-currencies that pay no yield and rely on the greater fool theory of investing. The old Gordon growth model can easily be applied to the business of an exchange, though, as can free cash flow models, residual income models, PE and PEG ratios, and the whole panoply of tools equity analysts have developed over the years. Of course, those same valuation metrics may show that Coinbase is significantly more than fairly valued. And yes, listings like these run somewhat contrary to the non-conformist spirit of crypto. Bitcoin promised a new decentralized world order, where sovereign individuals transact directly with one another without the need for intermediaries like banks, exchanges, and clearinghouses. Instead, the most lucrative crypto-related companies are those that provide financial services. In fact, it's perhaps a little ironic that for an asset class that promised to do away with intermediaries, financial exchanges have been among the biggest winners. In the early days, these operated in a regulation vacuum. Nobody knew what these assets were, and anyway, they were too small for regulators to bother with. So predictably, they were high-profile failures. For the most part, though, the industry seems to be shaking off those uncertain beginnings, and names like Binance, Kraken, and Bitfinex now trade billions in digital assets every day. There may soon be more IPOs in this space. A play on exchanges and other trading infrastructure might give the investor a buffer against volatility. Whether Bitcoin, Ethereum, and Dogecoin rallies or plunges, trading activity is likely to be robust. It only tends to fall in periods of price stability. And this second layer exposure also removes some of the risk of betting on the wrong horse. Who knows if crypto products Cardano, Polkadot Coin, or Tron end up the eventual winner? Yet it's reasonable to assume they'll all rely on the same trading venues as the current crop. Of course, these investments don't come without risks. The regulation issue remains unsettled, and the future may bring consolidation and more high-profile failures, as well as trading fee price wars. Meanwhile, existing non-crypto exchanges are starting to have a look. CME, which offers contracts in FX, commodities, and fixed income, has launched its own suite of cryptocurrency derivatives. And there's always the chance that Bitcoin will go back to its roots, with transactions across oceans taking place directly between sovereign individuals.
And those are the biggest stories this trading day, April 16, 2021. Catch Businessworld live again Monday next week at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News. Mask on, wash hands, and stay safe, Philippines.